Good morning, traders, and welcome to the morning coffee session. And yes, I've got my St. Patrick's shirt on for the week. It is St. Patrick's Day tomorrow, not today, but we did celebrate over the weekend. And yes, I'm still struggling. We did a pub crawl. No, all right, I'm not going to get into the details. All right, so this is the deal. What's happened over the weekend, at least on Sunday's Open here in the Forex Market? Well, we had the emergency rate cut out of the Feds, cut 1% off the rate. We had the Bank of New Zealand also going ahead and doing an emergency cut. What did they do? They cut 75 basis points. Listen here, the Aussies are feeling a little bit left behind because they went ahead and cut last week 25 basis points. Wasn't enough. The US cut 50 basis points last week. Now another 1%. And New Zealand dollar needs the Reserve Bank of New Zealand went ahead and cut 75 basis points. Listen here, everyone's taking steps of trying to. I didn't see what happened with the Bank of Japan this morning. I'm going to go ahead and check out the data. They were looking to do something. They were reviewing their rate decision. Don't know what happened with the monetary policy meeting. Don't know how they went ahead and reacted. We're going to go ahead and take a look. The markets have been really crazy. I mean, we've hit bottom. There's no doubt that we've hit bottom. And prices still continue to push lower and lower and lower. But yet we're not moving as fast as we did a couple of weeks ago. All right, it's not moving as fast. We're getting a little bit lower movement, but we're not getting these big gaps in the market. Markets open up with small gaps. It's a little choppy in the beginning. And then, of course, as the Tokyo market opens up, we're starting to see a bit of a surge. Now, we saw the Tokyo market actually plunge down, then rally up, drop down, rally up. It's been very indecisive. We've seen the VIX at the moment right now still showing stock fears based on the rally we've seen in the VIX. So there's a lot of things happening that's creating this sort of like panic in the market. And traders are panicking too. All right, and we're going to realize that there's different ways to trade the market. Now, you shouldn't really just stick onto one strategy. I don't just have one strategy that I'm following. I follow multiple strategies, and in fact, I've separated between two strategies. One being position trading strategy, the one that we follow right now. I trade two types of strategy within the one that I do. I do more of aggressive one, which is the weekly, higher risk, which is currently at the moment right now. We're going to go ahead and show you the details. And then I do another one, which is the daily targets. I trade the daily targets. And I'm really trading with very, very, very low risk because it's a larger trading account. I'm trading with actually 0.04% on each trade. It's very low risk. And the reason why I've done that is because I don't really want to go ahead and focus in on that trading account too often. I want to just let it ride. And these type of things that are happening in the market right now is just part of the trading agenda. Now, if you go ahead and take a look over here, you'll notice that we've got a lot of red numbers coming up here. A lot of red numbers. We can see that the Dow's down. Dow opened up last week, but the futures Dow market opened up lower. We've seen some S&P. We'll see now in the next couple of minutes. Well, actually, not more. A couple of minutes, about 20 minutes from now. We'll take a look and see how the Dow opens up for the week. We'll take a look at S&P. We know nickel was down. We know the VIX was up. We know that the stock market is still taking a bit of a beating. Now, with the Feds taking action that they have, would they have caused a little bit more panic saying, hey, listen here, the Feds are panicking, we should be panicking, should we go ahead and do? But listen here, we shouldn't see the Feds cut being a panic cut. It's more of a, listen here, we're making sure we're taking precaution, we're making sure that we are ahead of the game. We know what we're seeing in the market right now. We know that the economy, just not the U.S. economy, the global economy is taking a beating. We know the recession is always a topic of conversation. We need to take action, and that's what it is. It's really just looking at something and saying, hey, you know what? Let's rather go ahead and make sure that we're doing something instead of doing just nothing. And so I don't see it as a panic reaction. I see it as hey, listen here, let's just make sure that we are doing something instead of nothing. Well, it's a good thing. We'll go ahead and take a look, see how the stock market opens up at 9:30 and see if we're getting any sort of turn in the market. We did close off, by the way, Friday. Friday was good. We closed on Friday. Despite of the downside action we saw last week, we did get a positive close on Friday. We'll see how this week opens up and then how it maintains itself for the rest of the week. Now, let's go ahead and take a look at a couple of things right here. First, we want to go ahead and take a look at the actual calendar for the week. All right. Now, I hope everyone's got their cup of coffee. My mic, I changed my mic here last night on the last video. I don't know if you went ahead and checked it out, but the mic wasn't working so good. It was a little loud. I've got to go ahead and play around with that. Hopefully this mic is much better, and you can hear me loud and clear. All right, so let's go ahead and take a look and see what's going on right here. So now, Denai says no change to the rate decision. Well, let's go take a look over here. Banco, I didn't think that we're going to do anything. They at 0% at the moment right now. And yes, oh, sorry, my bad. It's actually 0 minus. So that negative interest rates right now, minus 0.10. So they didn't make any changes to their bank policy. We also have, of course, the Aussies have spoken about Thursday coming in and making a decision on Thursday based on their rate. They're really went ahead and dropped it 25 basis points. They may go ahead and actually make those changes on Thursday. So they're definitely going to look at that on Thursday. Now we've got the Swiss Bank, the Swiss National Bank, also making some policy changes as well. As we've seen, the Swissy also going ahead and moving around, very volatile last week, and we'll see probably the same thing happening this week if things don't stabilize. All right. Now the good thing is we do notice that if you notice the VIX a little bit over here on the right hand side, I'm not sure which side it's at to you, but you'll see down the bottom right here, we are seeing that the VIX is actually down a little bit this morning, and that shows that there could be a little bit of positiveness coming out of the stock market as we head more into this week. Let's see if it maintains itself. If it doesn't, and we do see the market continue to show fears in the market, then we'll need to go ahead and reposition ourselves. Well, let's go ahead and take a look over here at what we currently have going with regards to trading opportunities. I am in at the moment right now. I'm in on the Euro, New Zealand dollar, Euro Aussie, Euro CAD, US dollar CAD, Euro Pound, Pound JPY, Pound Aussie, and the Aussie JPY. Now, I am down, and I am down on all. All right, all the other stuff that was positive, it paid out last week. We're holding these positions. So let's go ahead and review and see. All right, this week, because we're only in how many currency pairs are we in here? Let's take a look at 1, 2, 3, 4, 5, 6, 7, 8. So we're in 8. I'm looking at 17 currency pairs. So which means that I've got additional 10. Additional 10. No, 9. My bad. Additional 9 currency pairs that we can still go ahead and actually pay attention to. Actually, I lied. We're actually in the money on the Pound Aussie. All right. So let's go ahead and take a look right here and see what is coming up this week that we need to pay attention to, and why it's important for us to pay attention to this week's opportunities is because it's a way for us to be able to recover from our losses. That's what it is. So I believe it is the 16th this week, is it? Yep, it's the 16th. And let's see if I'm going to go ahead and say we're holding still this position here. Actually, do we? Yes, we are. And we were buying. And we're still holding this position right here. And we are selling. No, but my bad. Yes, we're selling. And let's see here. We're holding this position here still. And this one we are buying as well. Okay, and let's take a look at this one right here. This one closed out. So we're closing out that one right here. I believe we're still in on the Euro Aussie. Some of the positions on the Euro Aussie. And we're still in on the Euro CAD, some of those positions. So this looks like what we've got currently right here. Let me go ahead and clear up this right here. Clean up that. Because now it's a new start, my friends, new week. All right, so this is what we got going here for this week. Let's start with the Aussie, Euro Aussie. Do we have new? And if we have new opportunities on the Euro Aussie, it just means that that price just continues to push. Look at that. Started to go ahead and chase after the highs right here. And listen here. This is anticipated to be our third wave right here. There is no doubt in my mind that we're looking for some correction move. All right? No doubt in my mind. Karen, thank you very much for your email. I did get it, and I read it out. I actually read it last night about, well, actually this morning, about 1 o'clock this morning. Yeah, I was up all night. Let's take a look over here. So we have a little bit of a push again here on the Euro Aussie as we see a bit of weakness out of the Tokyo market. This does affect the pair, and we started seeing a drop back to the downside right here. Now, if I go back to, let's go ahead and take a look at. I'm going to come to the long-term outlook on these pairs. But for right now, I'm going to go ahead and just take a look at the opportunities this week first. All right, so let's do it. All right, so this is where we're at. All right, so the Euro Aussie looks like price has not gone into an overbought condition. So again, you look at the week on week. All right, take a look here. You can see that that we're looking for price to come back to this level right here, come back to that level right here, and now the same thing right here. So we absolutely, and we had a bit of range-bound trading right here in that week, but other than that, there's been a big rally there, big rally here, and now we're still looking for price to come back down. So correction, listen here. When I say that correction is due, correction is due. All right, is absolutely due. And so we're going to anticipate price to go ahead and work its way back down south. All right, so let's go ahead and take a look at the next step right here, which is the opportunity this week. Yes, we have an opportunity this week. Price has not come up to that level, so let's just mark it off. Now, I want to be very clear on exactly what I do in the morning and how I go ahead and break down the setups. What I'm looking for at the moment right now, I'm looking for opportunities. So this document that you can find in the description is an opportunity document. Please don't get misunderstood by or don't misunderstand what I'm trying to do on this document. This document is not necessarily everything that I've captured this week or this quarter or this year. This document is the opportunity that the strategy is offering. Now, not everyone is going to be in every single trade. I get that, and nor would I be. All right, I'm very clear and very transparent about what I am in and what I'm not in. All right, and what I'm holding on to, what I'm not holding on to. Now, I'm going to be showing different results to what this is going to be showing, because this is the opportunity document. Again, not to say that I'm trading every single opportunity, but there's traders that are coming in for the first time and they've joined the session for the first time this week. And what we're doing here is just saying, hey, here's still an opportunity on this one if you haven't got in already. Maybe you closed out some of your positions and looking for new opportunities that some others are holding onto positions. That's what it is. This is an opportunity document. Let's just be absolutely clear on that, okay? I don't want to create any sort of misunderstanding of exactly what this is, because if I were to show this and trader were to look at this and say, well, big dog, you didn't close out that position. I get it. You're right. I didn't. Okay. All right. So this is it. So Euro Aussie is an opportunity this week. All right. It's an opportunity this week. We're looking for an overbought condition, which means a bearish alert. We're looking to sell the market short once it gets up too high. Now, it may just go back and touch this target without giving us the opportunity, but it is what it is. Let's go to the next one. Euro CAD. Now, you see, I've got a sort of a routine, a ritual, right, that I go through every single week. And I'm going to do that the same right here. This one is a hit target, so don't do anything. So if we've got a hit target, that means the price is still trading around the pivot point, which, can be a good thing, can be a bad thing. All right. Breaking news, by the way, futures hit limit down. Treasuries surge. So again, we're starting to see things happen. We've got another about 10 minutes before the stock market opens up. We'll see how things open up this morning. Dow futures are 4% down, so they're not expecting a good open. But we'll see how that plans out. All right, let's go ahead and continue. So this is that. Let's jump into Euro JPY. Euro JPY is a hit target, so we're going to call that a hit target right here. And what I do is I also go to the left, to the right here, and I see, okay, no opportunity. I'm not holding any open positions on this. You can see right here, I've got no open positions on Euro JPY. So if there was an opportunity this week, I would have gone ahead and traded this week. But there is nothing this week. Let's go to the next currency pair. Next currency pair is going to be the Euro. Yes, I remember, Karen. I remember the Euro JPY in 2018. Man, I remember a lot of those type of moves. Remember the Euro in 2000, I think it was in 2017, the Euro US Dollar rally. So we have those, there's no doubt. Now, there's a hit target here on the Euro New Zealand dollar. Let's call it a hit target. And let's go to the Euro Pound. Euro Pound sees an opportunity here. And actually, in fact, Euro Pound, here it is right here. All right. So price has gone ahead into a overbought condition. We're actually chasing after this previous target right here. So this target right here is what we're chasing after. This week's still opportunity. We can see we moved into an overbought condition. Traders are looking to sell it to the downside and chase after that target. Now, I want to go ahead and remind traders as well that I'm going to go ahead and also discuss the two ways to trade when the markets are very aggressive. Okay, because trading into a counter position in the market may put you into a position of over leveraging. There's a way to be able to manage that too. I'm going to be talking about that towards the end of this video. So stick around, check it out. We'll be talking about exactly why, or at least what we should be doing to make sure that we manage our risk correctly. All right, and that is when we add in new positions in, because when is the best time to add new trades in? Especially when the market is surging or plummeting, we need to know exactly what to do on those conditions. So we'll check it out in a moment. Okay, let's go ahead and continue. If we look over here on the Euro Pound, we have an unhit target. So we're actually going to go ahead and say that we have an unhit target. This is actually in an oversold condition, and we're actually in a sell, right? This is not me particularly. I know I'm in a sell already, but this is for a new trader taking on this opportunity. The opportunity came, I don't believe it came through here. I'm going to double check. Actually, it did. There it is there. Closing price was at 90.85. So 90.85, here it is right here. That's the first opportunity right here. So this is an active trade for this week. Okay? And this should be a little comforting knowing that if you're in a sell already, knowing that the price is moving to an overbought condition. And again, we will go into this a little more in depth on a larger time frame. Let's just cover what we've got currently as an opportunity this week. Okay, so here we go. This is Euro US Dollar. No opportunity this week, so we have a hit target. Okay, so it shows me that we've got very little opportunities this week. That it means that we could be heading into some sort of correction move, or we could be heading into we could be heading into a recovery or retracement move on those particular pairs. So this is the reason why we look at this right here to anticipate what the markets are doing. And let's go ahead and continue to monitor. So let's see here. This is pound. Let's go to pound. This is an opportunity this week. So let's go ahead and say pound is an unhit target looking for an oversold condition. Oh, let's just change that to pending. And this is going to be a bullish alert right here. All right, let's move to the next one, JPY. Now, it's important that you get this document open so that you go ahead and analyze exactly how and what we're doing. Look here, we're not quite in an overbought condition on this one. I believe I have a trade in already. Yes, I do. I've got 4 positions on the pound JPY, and it's now once again heading into a oversold condition. All right, it's not there yet. I'm going to mark it off as an unhit target. It's still pending, and it's looking for a bullish alert. Let's go ahead and look at pound New Zealand dollar. Right, pound New Zealand dollar. Yeah, we have pound New Zealand dollar is not really moving that rapidly, but unhit target, pending position. Also looking for a bullish alert right here, not there. Let's go to pound Aussie. Let me pull this down here. Pound Aussie right here. Pound Aussie is a hit target this week. Let's go to pound US dollar. And just notice how quickly I move to the next currency pair. If I don't see anything, if nothing's there, then simply go ahead and move on. All right, this week we've got pound US dollar looking for a bullish alert. Now, these are good signs. This means that, we're looking for price changes. Whether it's a trend change or a correction move, we're looking for that to happen. So you can see that most of the pairs are looking for recovery, looking for bullish recovery. Most of the pound pairs, are looking for bullish recovery. And then the opposite to the euros. The euro is actually looking for bearish recovery. All right. So a little change between the pound and the euro. They're both moving in opposite directions at the moment right now. We had a time where they were moving in the same direction, but it's not happening. We are actually moving in the opposite direction. Let's go take a look at Aussie JPY. Hit target this week as well. Let's go ahead and look at Aussie New Zealand dollar. All right. Aussie New Zealand dollar is hit target. We actually hit the target this week. And it hit it in the 5 o'clock candle. So hit target. Aussie New Zealand, Canadian, sorry. We have a opportunity this week. The CAD. Listen, I'm actually long on the CAD. I'm going to go into this a little bit more in depth. I'm in some other positions. I'm actually looking for Aussie CAD to rally. Right? I've got a lot of money invested in Aussie CAD. Too much, actually. Too much. Actually, that's one of my nightmare pairs at the moment right now. Let's go to Aussie US Dollar. And let's see here. All right, so Aussie US Dollar, we're looking at an opportunity this week as well. And looking for a bullish alert. Let's go to the last two right here. And let's go ahead and take a look at this. This is going to be on, see here. I'm going to go to US dollar right here, New Zealand CAD. All right, New Zealand CAD has got a hit target going here. Hit target. So let's go ahead and change up the details here. Hang on, did I call it a hit target? I mean, unhit target, my bad, sorry. Actually, what I wanted to do here is I wanted to actually hit it up as a low probability. So look for a bullish alert, but I'm going to call this a low probability right here. And then lastly here, US dollar CAD right here. And US dollar CAD looks like this. And that is a hit target this week. So we're not going to be focusing on that. Okay. All right. So that's fantastic. All right. So we've got these opportunities this week and that. But let's go ahead and take a look and see what we've got going with our current position, which is and I'm just trying to correct something here. Oh, there we go. All right, so let's go ahead and take a look at our current positions and what we got in our current positions. And I'm going to go to the chart. I'm going to go ahead and grab the top one right here first. I'm going to work for I always look at the ones that I got most positions in. So I'm going to go to the Euro, Euro Aussie. Actually, Euro New Zealand dollar, not too worried about that. Euro Aussie is the one I want to go ahead and focus in on right here. So let's go to a Euro Aussie. And I want to go to a larger time frame. Where is that? There, Euro. There we go. I got to sort out my workspaces here. All right, so here's the larger time frame right here. And we'll talk about that, John. We'll talk about the Euro pound in a moment. So here we go. So in the on the Euro Aussie, I spoke briefly on the Euro Aussie right here, and Euro Aussie has gone ahead and rallied, giving us a wave one. Then we had I actually did some multiple waves with inside here, indicating that we're actually at a wave three, and also at the 2.618 of the previous wave one swing. So there's definitely resistance here at the top. Now, from a position trader, you would like to see the market come back to retest this trend line. We came pretty close to that trend line there. It may be a good thing to start thinking about bearish on the Euro Aussie dollar as a swing trader. Now, you're probably saying, well, big dog, and I'm just going to go ahead and just give me 1 second here. I need to get rid of the stuff on the sideline here. There we go. Perfect. All right. So just so that you know my setup here, I've got two screens set up right here. I've got two screens set up right here. Got my screen at the back there. I've got another screen further back there that I've got stuff written on. So I've got screens all over right here. I can see the chat going here. I've got the news. I'm actually watching Bloomberg right now as we speak. So I'm checking out to make sure that we're not getting any stuff, any sort of flash news without me really knowing about it. So I've got the news up here. Notice that we've got something on Trump at the moment right now on Bloomberg. So I'm bouncing back and forth between different screens here to make sure that we've got all the information coming in at the same time. So this is the deal. When we look at a swing setup, especially on a daily time frame, right? And if we look at the daily environment and we have a trend line and also have some Fibonacci levels that the market has gone ahead and hit, we're looking as a trend trader and we're saying the market's going to correct itself. Now, if we're in the third wave, then which means we're expecting a very short correction and then price to move back up again, then retest the trend line and then actually have a bigger correction move after it hits the fifth wave. And so when you see these type of things, as a swing trader, you may want to go ahead and do a gear down trading approach. If you don't know what that is, check out my videos. You'll see that I talk about gear up, gear down trading approaches and what that consists of. And so when you're looking at the market hit a resistance level, you may want to use a gear down, maybe even a gear down scalping opportunity, so you can get in, take advantage of the opportunity before price goes ahead and moves back up again. Because on a third wave extension, in an Elliott wave structure, price is expected to correct itself in a shorter time, in a shorter move, right? We're not expecting a long-term retracement move. We're expecting a short retracement, then a continuation of the rally, then the market goes ahead and dips down again. So Euro Aussie, I'm very eager to get out of the Euro Aussie once we get to the opportunity. We're holding on to 9 positions. I'm already taking some losses. If you didn't know that, yeah, I'm taking some losses already on the Euro. I think I've lost 3 or 4 trades already on the Euro Aussie. I'm holding 9, but I've already lost 4 of those trades. So as the market moves up higher and it starts taking out my stops from my previous position, I'm starting to slowly scale out of my position. And so this is somewhat important to note, because when you're talking about managing your risk, this is the one thing that you have to go ahead and absolutely know for sure. Now I'm going to go to my system right here that I'm running. And if I go to my system that I'm running right here, I'm going to go ahead and take a look here at this one right here. I'm going to go ahead and take a look at my positions. So I'm maxed out at 10 positions. All right, take a look there. Now, the reason why you max them, that means I want to only take on the maximum amount of 10 positions. Once I get into 10 positions, I stop adding onto that position. And so this is what you need to think about. When price moves into levels of resistance, all right, you want to look to start selling at that point. Now, you only want to start selling at that point if you've run out of new positions that you're taking on. So if I said I want to only take on 10 positions on this trade, right? Only 10 positions. And let's say the market goes boom, 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 puts me in, let's call it 10 position right here. And price continues to rally. I'm not going to add on to this position until I start seeing resistance. Then I may go ahead and add. And maybe what I need to see is a lower time frame showing a trend, and then actually going ahead and reversing and doing something like this, then add on to that position as we start chasing after our target. So you're taking on a short-term trend and trading in that short-term direction. Now, the thing is about this that you need to know, okay? And want to make sure that everyone can see. Can everyone see right now? So everyone can see right now. Can everyone see my screen right now? I see someone said black screen. I don't know why that was the case. Everyone should be able to see charts right here. And I know there's a little delay in the chat as well, but it is what it is. Oh, by the way, S&P, so the S&P 500 actually opened up 3.6% so far. So we jumped 86 points. It's at 3.6% up. So we're seeing a good move on the market right now. So S&P opened up positive this morning. Okay. All right, cool. Everyone says we're good to go. All right, excellent. All right, so we got S&P opening up higher this morning, which is good. We'll take a look and see what the Dow does as well, as soon as it comes across the board right here. Now, there we go. Dow Jones is up 3.1%. So we're up 640 points this morning. Good start to the morning. All right, a very good start to the morning. Let's see if we can maintain some. It dropped down to 2.8%, but we've definitely seen some upside move already at the open. And hopefully we can maintain that position. Okay. All right, where we're at. Okay, so on the Euro Aussie, we're expecting some downside action on the Euro Aussie because we're looking for a correction move. And so we said that if we do get to a situation where price moves up past our maximum levels that we're looking to enter on this trade, then we need to make sure that we are going to go ahead and turn. Hold on, why am I seeing positive numbers come across Bloomberg right here? Let me open up my. Okay, all right, my bad. All right, just going ahead and open up my phone right here. And I don't know if I've got a delay here. S&P is actually down minus 2,250 points. Let's see here. Sorry, that was the Dow Jones. S&P is actually down 220 points. So there may be a delay on delay reaction on my Bloomberg right here. So we're actually down at the moment right now. I'm not sure if it opened up positive and then dropped, but it's down right now. All right, we'll continue to take a look at that. All right, let's get back to the chart here. If we take a look over here, this is the Euro Aussie. So the Euro Aussie, I think we're clear on the Euro Aussie. If we're going to continue to add on positions, look for resistance, here would be a good place to start thinking about resistance. In fact, where we're at right now, believe it or not, where we're at right now is a good place to think bearish. I want to go take a look over here. I just noticed something here. I put a trend line in, go from the bottom right here, going up to the top here. See what this does. Oh, snap. I like this. All right, I'm going to clean up this inside trend line right here. All right, I like this from a trend trading point of view. Check it out right here. See how prices come up right to the top here? Not only do we have a test in the top of this trend line right here, but we definitely have a test in here. I'm going to say right here, I'm going to go ahead and say that we're currently, all right, definitely at a very key resistance level for the Euro Aussie. I would be surprised if we don't see a starting downside move from the top right here. Bearish move on the Euro Aussie. So if I'm in on 9 positions on this one right here, and my break-even point is at 75.33, I don't care about 75.33, but I'm definitely going to be paying attention to the downside retrace move, because if this is a third wave move right here, and we look for price to dip down and then rally again, any sort of correction move on this, I'm looking to take my profit, get the heck out of Dodge, once, of course, I'm in the profit. Okay? We'll take a look and see what happens on this. Let's go ahead and take a look at the next pair right here. Next pair that I'm in on multiple positions right here is the US dollar, believe it or not, US dollar Canadian. All right, so let's go to US dollar CAD. 9 positions on this. And US dollar continues to push back up again. Now the question here is, we have an adjusted trend line. And does this adjusted trend line change things here? No, it doesn't. That actually is parallel to that. So this is what it looks like right here. So we've gone ahead and marked off this as well. Taking out that high. That high is not quite the 2000. It looks like a 2016 high, or maybe 2017 high. Let's see here. Yeah, let's do May 2017. And then let's see what else I got here. I got nothing else other than, of course, all the way up here at the top. And that'll be 2016 high in January. Let's go ahead and put that up here. And this is 2016 high right here. So the only thing that I'm seeing right here is that price is going to work into waves as well. So here's our first wave going up. Now price hits over here. Going to put that in there. And take a look over here. So we've still got a little bit of action left in this before price hits a Fibonacci 5th wave right here. This is going to be a Fibonacci hidden resistance. And then at that point right here, this just changes up again. Just kill that. That's where we're seeing resistance at that point right here. So there's still a bit of movement and not a whole bunch here. But we're looking at about another 100 pips to go before it starts hitting resistance here at the top. Right, and so when it hits resistance at the top right here, we maybe start thinking bearish at that point. So it's still about 100. Hey, listen here. If this starts pushing back down south a little earlier, you know, we're going to be okay with that. All right? We're going to be okay with that. So we get an early push down south. We'll go ahead and pay attention to that. Let me see what the got Jeremy Powell that's speaking right now. Let me just see what he's going to say.
Declining output lower in the second quarter than it was in the first quarter. After that, it's very hard to say how big the effects will be or how long they will last. We expect to maintain the rate at this level until we're confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. We think we have plenty of policy space left, plenty of power left in our tools. We do not see negative policy rates as likely to be an appropriate policy response here in the United States. We're going to be looking at the Treasury market function. Today's FOMC meeting was in lieu of the meeting scheduled for next Tuesday and Wednesday.
Okay, so that's pretty much it right here. That's what we've got going with regards to the Feds. So the Feds seem like they've got still a little bit of room, but they're never going to get into negative rates. And so we're pretty close to that at the moment right now. All right, so let's go ahead and continue. And let's go take a look. So on the Euro US dollar right here, we're looking for price to move back up to around about this level of another 100 pips to go before Euro CAD starts hitting a bit of resistance. If we turn before that, fantastic. All right. I'm not going to be too unhappy about that. Let's go ahead and yes, Denise, that was from last night's conference. Yes, that is correct. Yes, that's not now happening. It is last month. Yep. All right, let's go ahead and take a look at the next currency pair. So I know that I'm going to be in on the euro, or at least the US dollar CAD a little bit longer. Let's take a look at euro pound. All right, take a look at what's going on with the euro pound. And here we go. Listen here, we were inside consolidation. We were looking for price to move back up again. It's been a crazy ride here. We are still looking for that third wave move. All right. The reason why the euro pound has moved up so strongly is because we've got weak euro. Right. We've got weak euro, and we have we got strong euro, weak pound, and with that combination, it's going to make this pair move up very quickly. But this pair has been range bound since 2016. In fact, I think it was earlier than that. Let's take a look right here. It's around about July 2016. It moved into sideways trading. So that's been almost 4 years of sideways trading. And we're now coming back up to the top of the range right here. The question here that I know traders have got is, are we going to stall at this level? Are we going to stall at the level? So let me go ahead and do this. I'm just going to clear up things that we don't need on here. We don't need this. We don't need that. Just clean up house here. Just pay attention to what is important right now. So this is what's important right here. All right. If we do see some sort of correction move, I don't believe it's going to be, I don't believe it's going to be a long-term correction move. But we have hit the 2.618 right now. So just like every other pair that we've seen, specifically the euro crosses are setting up for a deeper correction move. We are looking for some sort of correction move. If it's a short-term correction move, that's fine, but we are looking for a correction move in the euros. And so as we start seeing the euro correct itself, I'm going to start pushing out, or at least finding levels that the market can correct to. Now, the 1.618 right here is always going to be a key level for the market to come back to retest. So I'm expecting price to move back about 300 points back before going ahead and taking off again to find the next level of resistance, and that is up here at the 9300. Let's see, when we were down here below, as a swing trader, we're saying, let's buy. In fact, let me go ahead and take a look at my swing trading on the euro. Here's the, there we go, euro pound. We just updated this last week, and we said, all right, let's stand aside because we got in and out of trades, and now we're looking for the market to go ahead and correct itself. So we closed out, and now we're waiting for correction. Waiting for a correction to be complete. So even though it is a very aggressive trend that we're in right here, we got to get some sort of correction in order to be able to look for support to buy off that support level again. And although we were buying down here below and trades are paying off, now we're in a position where we've taken our profit. Now we're waiting for the next move to get back in again. And so coming back to our trades that we're currently in, I'm currently in on multiple sell positions right here. My break-even point is at 88.66. And 88.66 is down around about here. So right here at where I'm expecting the support to be is my break-even point. So that's not very comforting, is it? Knowing that my break-even point is pretty much where the market's going to retrace to. But again, I have to maybe make sure that everyone's clear on this. When I look at a trading opportunity, I look at my overall position. I'm not trying to make money on every trade that I'm in. All right? I'm trying to get in on a trade. Oopsie, that doesn't look good. I'm trying to get in on a trade, and I'm trying to establish an opportunity that's going to help me to get in on multiple positions on multiple currency pairs, but overall show net profit. So when I'm in on a position like the euro pound, where it looks like the market may correct itself towards my retracement, or at least my break-even point, I'm going to not look at that currency pair on its own, but look at the overall setup and make sure that I'm in a good position by the time that I make decisions on that pair to get out. Am I in profit on other pairs? Am I making profit on other pairs? Because it's not all about just one currency pair. It's about the overall position that you have and how are you sitting in profit, okay? And that's how I look at it. So when I look at this and I'm going, oh my gosh, going to make 300 pips before I get to break even? That sucks, man. That really does. But that's the fortunate part of spreading risk across different currency pairs so that you can make money on some. Some of them might be break even, some of them might be a couple of losses, some of them might be a couple of wins. But overall, you're looking at the net P&L that you're trying to chase after. All right. So that's on the euro pound. Let's go ahead and take a look at, and hey, listen here. If it means that I hold on to this, if the market eventually goes all the way up here to the top, right? So you have a short correction, goes up, I don't ever get down to my break-even point, goes back over here, and I'm still in on the trades, and now the market wants to go back into the bottom of the range again, then I'll be making up a lot more money. But in this correction right here, I'm not expected to make money, or at least a huge amount of money coming back here, because the market may go ahead and rally back up again. So if I don't want to go in and stay in on this ride, then I've got to look for a way to get out here so that when the market goes back up again, I'm looking for a different directional bias. Okay. All right. Let's go ahead and close it off with maybe one final pair right here. One final pair right here is going to be, let's see here, Euro Canadian. All right, Euro Canadian. Let's take a look here. All right, Euro Canadian, once again, oh look, we haven't filled the gap yet, right? Market hasn't filled the gap yet. It's come back very aggressively. Let's take a look at US oil. Now, I'm not going to change my mind about what I'm expecting to happen here. I'm still expecting correction. There's no doubt in my mind. Euro crosses across the board. Hear me out here. We're looking for correction in the euros, all right? We're looking for correction in the pounds, all right? Now, let's go ahead and take a look at US oil. All right, so I don't have to dig too much into that currency pair because we're all looking for correction. Now, listen here. If you look at Euro Canadian. Euro Canadian is still rallying because we've seen weakness out in US oil. Now, I said last night in my conversation, or at least my video, if you haven't reviewed last night's video, please go ahead and check it out. But what's happened is price has gone ahead and tested against support again. Now, with price testing support down here, we may end up, and I said it last night, we may end up being a little slow from recovery here. All right, but if it does recover, it's going to come up to around about $42 a barrel right here. So when it does recover, we'll come back. We are at support. All right, we are at support. And so we're expecting price to be supported at this level and then go back up and north. Obviously, the war between the Middle East and Russia continues to be a factor, all right? Continue to be a factor. But as soon as we start seeing a recovery in U.S. oil, then we'll see that recovery on the Canadian crosses, specifically the Euro-CAD that we're looking at right now that we've got multiple positions in. And so when that starts happening, we'll then look for the recovery and look for the opportunity to get the heck out of Dodge, all right? And my recovery, if I look over here, $42 barrels is where I'm anticipating price to be back up to. If I go ahead and extend this trend line down here, let's see if I go ahead and connect the lines. That's not helpful. And that's not helpful either. All right. I'm not going to say that's helpful at all. All right, so we definitely have this level right here. So I'm not going to pay attention to this trend line right here. But definitely this trend line right here is becoming a factor. All right, so it's certainly becoming a factor right here, and we'll go ahead and take a look at that level. So this is the deal. So I spoke about it earlier on, and I said that we're going to talk about the different ways to enter the market. All right. So there's two ways to enter the market and to add on to positions. Right. Number one, when you get into a trading opportunity and you've got your strategy is to add in multiple positions. Always go ahead and max how many positions you want to get in. The reason why you want to do that is because you want to do the math to make sure that you understand what your overall exposure is. Each position should have a stop, should have a point where you're going to cut your losses. I risk on different trading accounts anything between 0.04% on a trade all the way up to 0.25%. Okay, so that is the range that I'm in. Depending on the account size, depending on how aggressive I want to trade that, and of course depending on how many currency pairs I look at, I'll be moving between that range on risk. Now, if you're looking at a trade that you enter in multiple positions and the market's moving very aggressively against you, the reason why you want to calculate how many positions you want to enter into the trade is because once the market goes into a very aggressive trend, bearish or bullish, doesn't matter, you want to be able to know if the market continues to move and doesn't correct itself. And let's take the worst case scenario. And you said that you want to go with a maximum of 10 positions. And you're risking, let's say, 1.0% as a risk. Then you take that, you times that by 10, all right? Because that's it. If each trade is 0.1% risk, all right, times that by 10, that's 1% risk on the total trading account. Or these on the total currency pair of the trading account. So each currency pair, if you risk that amount on each currency pair with a maximum of 10 positions in, then you know that you're risking 1% on each position. Now, this is also important. How many currency pairs are you following? If you're following 17 currency pairs and you're risking 1% on each currency, all right, that means you've got a possibility of a 17% drawdown on your trading account. If all goes wrong and every single one of those currency pairs go against you and you lose on 10 positions and you've calculated your risk, you know you're in for 17%. Okay? And so you have to ask the question, is that what I'm willing to risk? Is that the type of drawdowns that I'm willing to take on? If it isn't, you need to make some changes. All right? So these are the type of things. Now, you've got that option to say, I'm going to put in maximum of 10 positions in. Once the 10 positions are hit, and I'm in on 10 positions, the next or the second strategy to be able to trade is say that I'm going to wait until I have a reversal in the market. When you have a reversal set up, then you're going to go ahead down to a lower time frame, look for that reversal change in trend, and then trade it like you're trading a trend. All right? Go ahead and add positions like you were trading the trend in the direction of your original target. But only once the trend reverses. So which means that you stand on the sideline, once you hit your maximum positions, you stand on the sideline and say, that's all I'm willing to risk at the moment until I see a reversal in trend. Once the reversal in trend takes place, then you go ahead and reposition yourself again and trade it like you would trade a trend, all right? And then as the market moves in your favor, you then go ahead and take your, either capture profit, get out of break even, whatever your decision is made on that specific setup. So there's two ways to handle a market that's very aggressive when trading a position type strategy. And position type of strategy is always looking at support and resistance and buying in at those levels. Whether it's a fixed level that you're getting in or whether it's an actually defined level that you're getting in, you have to go ahead and maximize how many positions I'm going to take on. And what does that look like as an overall risk on your portfolio if the worst case scenario comes? Because listen here, every position that we have, every trader I'm trading has a stop loss on it. There's a limit of where I'm going to get out. It's not an open checkbook, and yours shouldn't be either. So when you go ahead and say, I'm willing to risk X amount of percentage on my trading account, you know that that percentage is linked up to how many entry points you're going to get into, how many currency pairs you're going to be trading, and then what your overall risk is going to be on your portfolio. So make sure you check that, because if you control that, if you control the risk and keep the risk tolerance to a level that you're comfortable with, you're never going to get into a panic stage. You're never going to get into an over-leveraged position. Never going to get into margin calls. You're always going to be calm, collective, and know that, hey, listen here, I understood the risk going into this. I have to be man enough now, or lady enough now, to be able to continue to follow through with my plan. Because once you start changing your plan, that's when panic jumps in. And when panic jumps in, you can do all kinds of things that may not be something that you are going to enjoy later. In fact, there'll be a lot of regret with that. So trade with no regrets, all right? Trade with no regrets. And that's it. Pretty much it is. Guys, that's it. All right, we're done. We're going to go ahead and cover up Friday. Remember, we're moving from a Monday to a Friday session only. So we have a Monday session. We talk about the markets. I'm giving a little more time on this on a Monday session. On a Friday, we're going to be doing what we call the Preachy Friday. Look at the overall direction of the market, or at least take a look at all our positions. Evaluate, find out exactly what we're going to do over the weekend. So we'll do that again on Friday. So Monday and Fridays are two sessions now. I may change it. There was a suggestion that I go ahead and do a midweek session. I'm going to keep the midweek session in for maybe if something exciting happens during the week. Okay, because once we establish what we're doing on a Monday, all we really need to do is review it again on Friday. Because whatever we've looked at Monday, we're just going to let the market do what it needs to do. But what I will do is I'll keep Wednesday, which is midweek session. I'll keep that open for a surprise, an announcement of whatever's happening. If something exciting happens, I'll go ahead and broadcast on Wednesday. But if nothing happens, we'll keep it on Monday and a Friday, because we don't really need to communicate too much on what we're currently following, because either the market's hit the target or hasn't hit the target. And if it hasn't hit the target, have got into the trade. And if we got into the trade, where we're sitting. That's pretty much it. And we'll review that on Friday again. All right, traders. Well, that's it from us. Enjoy the week. Have a fantastic week of trading. And I'll see everyone back again on Friday to go ahead and check it out. And hopefully there's some great news this week. And Wednesday, we do another surprise session to be able to discuss exactly what's going on. With that being said, traders, this is FX Big Dog signing off.